What's going on, everybody? Quick video here. Kind of want to look at the market. We only got about an hour and a half left of today's session, so I want to kind of dive into the Qs here. As the triple Qs, the Nasdaq, a lot of tech stocks had a good relief bounce today. So what I don't want you guys to get confused on is when we have these type of relief bounces, when the market is trading underneath supply, is that does not mean that everything is going back to all-time highs. There is no such thing as an all-time breakout or an all-time high when we are trading underneath supply here. So it doesn't matter what stock you're trading in the triple Qs. For example, if you're trading Facebook or Nvidia or Square, a type of day like today doesn't mean that you're looking for breakout long plays or breakout long setups. What you're looking for is bounces into and off of supports, and what you're looking for is confirmations of some of the upper supply zones. But as far as an overall macro picture where we're going back to all-time highs, everything is all gravy and this is the bottom, is not necessarily the case. Just like when we have a raging bull market, we get these pullbacks into rising support. You can play the buy the dip scenario. You buy the dip, short-term shorts get trapped and we go long. Right now, for example, the bears have control, so we are going to get these bounces, which are going to be green days, and then the bears sort of trap longs into supply, if that makes sense, or into resistance, and then push it lower. So it's just a little bit different. So I do have the daily time frame pulled up here on the triple Qs. You can see obviously all-time highs 382. We did bottom tick here at 350, so we are about 32 points off of the highs. Even if from a swing perspective we were to get a bounce, and let's say it was around a 50% bounce on this move and got rejected and then made a new lower low, that 50% bounce would take us right here to this 50-day moving average. That's why I have so many of these moving averages and so many of these supply and demand zones on my chart. I know to a lot of newer traders, or even some quote unquote more experienced traders that you see out there on social media, where they kind of make fun of and say, you don't need all these indicators, this, that, and the other. Well, when you're in a market like this, and when you're looking for the next area of supply or next area of demand, it does help and it does pay. So first things first is we are trading underneath the 50-day moving average here. So overall market sentiment on tech stocks across the board is bearish. Okay. Anytime we're trading below supply on a 50-day moving average, generally stocks go lower. Obviously, the 5-day moving average is a short and most near-term sentiment that we like to use. So if we are currently trading over the 5-day moving average, then generally on a day-to-day basis, maybe 1, 2, 3 days, we can kind of look to get those 1, 2, 3 day bounces. And if we get rejected at the next supply zone, which would be the 10-day moving average, then we can kind of know that that is either the next area of supply that we need to confirm, or where we're going to possibly get rejected, and you can sort of top fish going short off of those levels. So you can see here for the past 1, 2, 3, 4, 5, almost 6 days here, we've been getting rejected at this green line, which is a 5-day moving average. Today, as long as things hold, currently it's 11:30 in the morning. As long as things hold today, we are going to close above the 5-day moving average here. Does not mean that the end is over and it's time to start buying the dip on everything. What that means is if you are a scalper, this is a scalper's delight market, meaning that the first close over the 5-day moving average is going to give us a little bit of room to run. If I just draw a basic trend line here, let's say, for example, we close at 359.63 on the triple Qs, we are going to have room to the next supply, which is about 363. So about 3 points worth of upside at this level here is where we're going to want to either exit our long positions, our long scalps, exit our long positions here, hold some runners, and see, do we get rejected at the next supply zone? If we get rejected at the supply zone, then we know that stocks trade from supply to supply and demand to demand. So what that means is when we are trading over a moving average, that is a supply zone. If we are trading over this 5-day moving average, well, then stocks are going to trade from this supply zone to this supply zone, and this supply zone would be the 10-day moving average at 363. If we were to close below the 10-day or the 5-day moving average, then you know that we have the 100, the 150, and then the 200 moving averages a lot lower down here. So we have to keep in mind that anytime we are below supply, stocks trade from demand to demand. If I just kind of go back here to these all-time highs here, so we made all-time highs here at 382.78. And then as soon as we lost this 5-day moving average, we lost the 10-day and we traded right to the next demand zone, which is this purple line, and it is the 20-day moving average. We held it 1, 2, 3 times, tried to get the bounce. We lost this demand zone and we came right down to the next demand zone, which is a linear regression channel 50. As soon as we lost this, we gapped down to the 50 and lost the 50. Tried to reclaim the 50-day moving average, made a good attempt. So this is a bounce attempt here, made a good bounce attempt here, but got rejected at the 10 and the 20-day moving average. So just going back to what I said, if stocks are going to trade from supply to supply and demand to demand, well, anytime we confirm a supply zone means that we have room to push to the next supply zone. Anytime we start losing a demand zone means that we're going to tread lower to the next demand zone. It's not rocket science. You don't have to make it a lot harder or more complicated. It's very, very simple. Right now, we are trading over the 5-day moving average. The triple Qs does have 3 to 4 points worth of room. So could this bounce continue into tomorrow, which is Tuesday or Wednesday? Absolutely. What we really want to look at is if the market gaps higher, if the futures are, overnight up 100, 200 points and the market gaps higher into supply, meaning we come and we gap open into this 340, 363, just look for, look for the market to sell into that gap up. Okay. So anytime you have a gap up into supply, you want to look for the rejection, and then they start selling into that supply zone and then tread lower. What you kind of want is more of either a red open or a flat open, so you can kind of climb higher and give your stocks a lot more room to run. Hope that kind of makes a little bit of sense here, but nothing to be too worried about. If we were to get rejected here at the 10 or the 20-day moving average and we start to curl back over, the next level we're looking to hold is this 350 zone. If we lose 350, we come down to 347, and obviously any close below 347 takes us to this 200-day moving average at $340. So let's keep an eye on that. We did lose a major support on the weekly time frame here, which the bulls are trying to confirm now. So you can see yesterday was the first break and close below this purple line, which is the 20-day moving average. Today we are getting a push higher, right? We are getting this bounce, but you can see here we are still rejected on the weekly time frame at the 20-day moving average. So if we get rejected, then we could expect more downside from a weekly outlook. I know things sound a little bit, crazy, a little bit technical. Things have to be maneuvered a little bit differently in a market like this versus when everything is just going up and everything is trading above supply. Everything is great. You get a little bit of a dip, you buy it off support, things continue to ramp higher. When we are trading underneath supply, there's a lot more factors and technical levels that we need to really look at. So even though today overall seems good for the Nasdaq and the triple Qs, up 6 points, up 2% on the day, we were down about, a lot more than that yesterday. So we're still being rejected here at the 20-day moving average. Let's just kind of see how we finish out the day. And from a daily aspect, a daily look, if we continue and we hold this level and we close over that 5-day moving average, we possibly have another 1 to 2 days worth of bounce to the upside. If we continue to get rejected on the weekly time frame at the 20-day moving average, well, then if we believe that, again, stocks go from supply to supply and demand to demand, We get rejected at the 20-day. The next demand zone is the 50-day moving average on the weekly time frame, which sits at about $333.